Hi everyone. In the previous video, we learned about the financial position with respect to assets and liabilities. How much liability the company has and how much asset the company has. Now we shall learn the basic terms that will be used in accounting. First is your sales. Sales is the amount that they generate from selling the goods or the services that the company has. Basically, these are direct incomes. Example here, the real estate industries, their main sales will be sale of houses or flats or villas. This is the sale, direct income, in which direct income means which the business is involved in, or it might be the cement industry, or the business involved where it receives from selling the goods and services. It is known as sales. Next, you have revenue. Revenue will include sales and it will also include indirect income. Now, cement industry. Suppose cement industry has invested some amount in FD. You get interest. That interest is known as indirect income. Or you might receive commission for making some activities for the third party. You tend to earn commission. That is also an indirect income because that is not part of the original business that the business is established for. Indirect income. So, revenue will include direct income plus indirect income. Next, we have expenses. To make the sales, you should incur some cost of raw materials, or it might be paying wages, salaries, research and development, selling and distribution. So, or to make the sales, you would have incurred some expenses, direct expenses, and which are recurring in nature. These are expenses. And we have next item is expenditure. Expenditure here in real estate industries. What will be the major expenditure? Expenditure is the investment in asset where the cash flow will be more than 12 months. Example, building. Suppose real estate industry, the corporate office has its own building. So that will be an asset which is helped in running this business. This is expenditure. Next, we shall see what is profit. Profit is where the sales are or revenue. Total revenue is more, expenses are less. Suppose your sales earned during the year is 1000 and expenses you have incurred is 800. So the profit will be 200 rupees. Next, we shall see some more items with respect to accounting. We have gain. We just now learned profit. What is this gain now? These are again which is occurring in the business, which is incidental to the business. Incidental to the business. Suppose you have the old building which is not required. You tend to sell that building. That building when you purchased was 1000 rupees. Now its value is some 4 lakh. Now, if you have incurred any expenses with respect to brokerage for selling this building, then you will tend to minus that. Otherwise, the gain here, whatever you have earned is 3,99,000 rupees. This is incidental to the business. It is not major or it is not major. It is not recurring in the business. Next, we have loss. Loss where your revenue is less, expenses are more. Example, revenue is 1000, expenses is 1100. Now, minus 100 will be the loss that the company has incurred. Next, we have discount. Discount you might have allowed when you're making sales, or you might have received when you purchased the goods. Goods in the sense, here you will consider that as a raw material. And this discount might be of two types, either cash discount or it might be trade discount. Cash discount. The person will tell, if you pay me within 30 days, I will give you 5% cash discount. So suppose if you have to pay 1000 rupees and if you're paying it within 30 days, then 5% discount will be made. So 50 rupees will be the discount and you will have to pay 950 rupees as the total amount because you've got discount because you're making within time period. Trade discount is for, it will be an agreed percentage for purchasing the goods. Suppose this is given by the wholesalers to the retailers. Suppose wholesaler tells, if you purchase 1000 units of goods, I will give you 2% discount on the price of the product. This is discount. This is with respect to, and discount received also with respect to cash payment. If I'm making it earlier, they might give cash discount, or if I'm purchasing it in a bulk orders, then they might give a trade discount. We have some more. We have two more concepts here. One is voucher. Now, either when you make sales or when you make purchases, they might give an invoice. Invoice for what? This is the documentary evidence so that you have made purchases or sales. This will be a bill. That will be a documentary evidence that the transaction is taken place. And the last item which we will learn will be capital. Capital is the owner's investment. How much he is invested in the business in the form of capital. Owners invested. Why do they invest money? To do business. Why do they do business? Main aim is to make profit. This here the basic concepts of accounting ends. Next, we have to learn the golden rules of accounting, what is debit, what is credit in the next chapter. And we also have the next video we shall cover is accounting concepts, then golden rules of accounting, what is debit, what is credit, we shall see in the next video. Thank you.